Welcome to my channel. So this will be my first video on this channel. I'm not expecting anyone to see this video. This video is going to serve as a diary for me for some of my trades. I'm a futures trader. I've been trading futures market now for about 10 years now. I usually write down my trades. I figured, you know what, for this specific trade, why not make a video out of it? Maybe some of you will follow along. Maybe some of you will learn some stuff. I'm not going to go in full details why I'm taking this trade particularly, just kind of a general overview. If there's an audience out there that is more interested, I'm willing to dive deeper into it in subsequent videos. But we're gonna try to keep this short and sweet. So the product that I bought in today is coffee, the commodity. So not an ETF, we're not messing around with options, any sort of derivatives, strictly on the futures market, coffee, which is ticker KC. Which, as you could also tell, right now is trading. It did trade about 3.5% up for the day at it's about $1.93 a pound. Okay, so why did I get into this trade? What causes me to go long, going short? FYI, I'm currently short on this trade. Well, and the reason I got into it is strictly based on the Commitment of Traders report. Essentially, if you are a large trader, you must report your trades, and that is being marked down. And every single week, we get this data on Friday, it goes up to Tuesday, showing the different positioning. So as we look here, an example of a website taking that data, making it easier for us to understand. We have producers, we have swap dealers, we have managed money, other reportables, and non-reportables. So quickly go down the list. Producers, these are the people actually who have the crop itself, coffee, right? So they're here. Swap dealers, think of them as market makers, right? The ones that are helping make the market. Managed money would be institutional investors, people with a lot of money, millions to billions of dollars. Other reportables, we're not quite sure what category they fit in. Typically, though, they also have quite a bit of money, but they're not looking to speculate whatsoever. Compared to managed money, that usually is there to speculate on the product. Non-reportable positions would be people such as myself, so any small retail investors or people that simply do not fit in within the managed money category simply because they don't trade enough contracts would go under the non-reportable positions. Keep in mind, every commodity out there has a different threshold for what it takes to no longer be considered managed money. Anyhow, so here's what I'm looking at here. So I want to remove everything except producers and merchants for this particular example when it comes to coffee. We're looking strictly at those that have the crop itself and how they're positioning themselves right now. Now, typically when you use the Commitment of Traders report, you cannot look at the data in its totality and be like, well, we can see that the producers are currently short, net short about 60,000 tons of coffee. Remember, it's gonna be they have longs and shorts, so we're looking at a net position. So we can't look at this and be like, well, they're always short. Well, yeah, we can't do that. Instead, we have to look relative to the past. Usually for a crop like coffee, you're looking at something along the lines of like 6 months to a year, so we want to pull that backwards, right? So for example, let's imagine the right side of this graph didn't occur yet after October. We see that producers are less short than usual up here, right? And then it starts to come down, right? It starts to come down. And we see that it came down to here. And would we take a short here? Probably not, because if we're looking at a 6 months to a year basis, we can see that they were much more short less than a year ago, right? So we're gonna wait to get to that level, if not under it, right? So once we start ticking below it, which is about here, December 1st, December 18th, that's when we actually started pounding the table. And this is less, it's still less than a year, by the way, right? But we're under. Producers are more short than they were less than a year ago. So relatively based, we are more short. Again, it's all based on time intervals here. That's when we will take a short trade, right? And you can kind of see price is at the very top here as it works. Anyhow, that would have been a perfect entry, obviously. We missed it. We missed the coffee did go down. We do see producer got a little bit long. But then this past week, as price did go up a little bit, we can also see in the chart here, this was for the week. Now again, we really only have the data up to Tuesday, so it would be that candle right up there, which is kind of towards, it's near the peak of the week, so we only know positioning up to that candle up there. But we can see that the producers ended up getting a bit more short once again. Either way, we took the short. You can see what my position is, 193.34. The market essentially ended just there. We're down $3. Obviously, that's nothing. Now, it's one contract. Keep in mind, even though it's one contract, which has a market value of 72,000, it moves quite a bit. If we look at the range, just quickly, take the bottom to the top here, that's a 4.5% move today. Yesterday, that was a 3.5 move, right? If we look at this candle here, right, that's a 5.5 move, right? The product moves quite a lot. So even out on one contract, my P&L will likely move $2,000 to $3,000 per day on such a trade. So make sure that if you're getting into the trade, you size up accordingly. Now let's think about this logically real quick. Why even do this? Why do we care about producers being less short? Well, if we also look at what the swap dealers are doing, so the market makers, we can see the market makers are also getting more and more short, again, relative to the past year, right? We have to go all the way to October 2022 to find them this short, right? So this is extremely short. And you could see, same thing here, kind of once we breached the July low for how short they were, that's also where the top was. But anyhow, they've continued to get more and more short because, again, market makers will take the other side of the trade. So as managed money, here's managed money, as managed money continues to go more and more long, which they have, you got two parties taking those trades. You got the producers on the flip side that have gone more short, and you have the market makers on the other side, right? Now, the market makers are not there to speculate. Obviously, they're there to simply make the books. They get paid a small fee for making the trade happen. They're not there to go long or short. They're not speculating in the market. It's still interesting to look at them because it tells us what the speculators are doing in the market. And typically, as we know, the majority of managed money tends to underperform the market, right? And for good reason, right? So if we all know that, hey, all the managed money is going this direction, doesn't matter if it's small investors or large investors, if they're all going that direction, it's not going to be the right direction. So again, managed money continues to go long. Their volume is being sucked up by the market makers, and it's being sucked up by the producers. Producers are very just simply interesting for me to look at because obviously they have a very close input as to what the actual crop is doing, right? They're the ones that are watering it. They're the ones that can see how much supply there's going to be and so forth. They're basically on the ground as it comes to be. But anyhow, we're currently in this trade, right? So how do we get out of this trade? Let's imagine we start making money here. It starts to turn back around. When do we get out? Well, getting out is a little trickier because we can't do it quickly. We do have to wait for these reports to come out if we want to stick to the methodology of how this works, right? If we start seeing, for example, this is beginning to curl up and the producer is getting long or less short much quicker, we may want to exit that trade, right? Same thing if this is, by the way, small investors. So if we start seeing small investors beginning to go short, right, you can see that relative to about a year ago, right, they're close to here. They actually were right. Notice how small investors were correct. They were most bullish right there, right for that pop right there. But then right here, as you could see, they messed up, right? They were most bearish here, and look at this, boom, big move up. And this is a massive move, by the way, from 173 low to 204 high. That's a lot of money to be made in between. It's like 10-15% or so. So that's a big move. We got to pay attention to how the positions change. If we see a more neutral reading where it's not that extreme, that's when we get out of the trade. Okay, but what if the trade doesn't work out, right? The market can turn, but maybe it's not going to turn right now. What if it continues to go all the way up here and then it turns later on? And we can't really hold the position for that long because it's never really that good to be diamond holding a commodity. Well, we might have to be fickle at first, and what I'm personally going to be looking at here is we may have to play around with the peak from Wednesday here, okay? In other words, if we close above it, we might have to get out of this trade. If we turn back under, right, this mark here about 193, we're going to get back into the trade. Is that going to chop us up a little bit? Yes, it's going to chop us up. We're going to lose, obviously. We have to keep getting in and out of this. But commodities move very quickly if you're on the wrong side of it. Notice just all of these quick jolts up, and how quickly it falls down. Just, again, to understand how quickly it can drop here. From there to there, that's a 10% drop in, what, about 2 weeks, you know? Or here, you're looking at, you know, a 17% increase in what? About 14 days or so, right? These things move very quickly. It can very well turn from here, but we don't want to be stuck in a position where it continues to rip up. We did see some relief in it the last couple days, particularly today, simply due to, I'll just bring this across the screen. So yeah, it's fickle, right? Maybe on Monday is gonna be a massive rainstorm, and well, not rainstorm. It's not gonna rain, right? You gotta look at the weather to figure out what's going on here. Obviously, if it rains, that means, you know, in the future there's gonna be more crop, so there's more supply and so forth, right? Typically, more supply, price goes down, right? Less supply, more demand, price goes up, and so forth, right? It's very different than equities, obviously. Equities are based on future profits. Commodities trade very much, obviously, in supply and demand. And they're very fickle, just simply based on rain cycles and geopolitical events. But, I mean, that's it. I'm going to try to keep you guys updated. If, again, likely very few, if any, are going to be watching this video, just for myself, kind of, to record some trades. But if you found it interesting, just like the video. I mean, that's one way to kind of maybe, if I see that there's some support for this sort of content and better content, to be honest, I'll look to make more of it. I'll keep you guys updated. Like I said, this is a real money position, by the way. This is not paper money. It's a real position. You can see how I was actually previously short coffee. Unfortunately, I let it come back to me, and I profited very little from it, $300 or something. But I was up as much as like $4,000 at some point. It wasn't managed well, and it was during this little thing here. So you see these two big candles, that's what I mean. Like, it just really moves against you quickly. So I got out, but I'm back in again. Basically, a little worse entry than my original entry. But that's okay, but yeah. Well, again, thank you so much. Like the video if you can, and thank you for watching.